Good morning, Mark Soderberg with ADM Investor Services with your morning ag market update. A quiet, uneventful trade here overnight, as you might expect on Christmas Eve. Starting to firm up a little bit, however, I think largely led by a lower U.S. dollar. Corn right now is up 1 to 1.5 cents near session highs. Soybean prices 2 to 3 better. Wheat is still mixed, just within about a penny of unchanged across the three classes, and higher in both products. Meal is up less than a buck, while bean oil has now flipped, trading 10 to 15 points higher. We get another export sales update a bit later this morning. That will take us up through sales through December 11th, and after today's close, we'll also get an update from the CFTC showing traders positioning as of December 16th. Yesterday's export sales report through December 4th showed soybean commitments at only 859 million bushels. That's the lowest now in 14 years, down 37% from a year ago. The USDA forecast is down only 13%. Actual reported sales to China plus announced flash sales have now reached roughly 6 million metric tons. Most suspect that actual purchases to date are closer to 8 million metric tons when you tally up some of the smaller unannounced sales and some of the sales currently resting in the unknown category. We'll see if we can tack on any more to that today. I suspect that Chinese purchases will come to an abrupt halt when and if they reach 12 million metric tons, likely sometime early next year when they begin to shift all of their buying to cheaper South American supplies. Corn exports remain on a record pace, up 30% from a year ago versus USDA forecast of up only 12%. Look for U.S. demand for corn to remain solid into next year, with corn competitively priced through Q1 of 2026. Even wheat sales up a solid 23% year to date. USDA forecast up 9%. So far, weather across much of South America has been quite favorable. However, world weather is a little bit concerned over the potential for a high-pressure ridge, possibly setting up over east central part of the country in Brazil. Late this month and into early January, this may lead to a period of hot, dry weather. Right now, most soybean production forecasts range between 175 million metric tons, that being the USDA, and 180 million metric tons, and trending higher. Conditions in Argentina remain mostly favorable, with the exception of the southwestern third of the country there, which remains in a drier than normal pattern. In the U.S., above to much above normal temperatures across much of the nation's midsection, likely to prevent a white Christmas for most. We do, however, see significant cooling for the north central, Midwest, and Great Lakes region by early next week. March 26 corn recovered back up into the upper end of its 435 to 455 range. Soybean prices seem to be stabilizing now just above that 1050 level for the spot Jan. I still sense the path of least resistance, however, is to the downside. Speculative traders still hold a sizable long position at about 150,000 contracts, many of which are now underwater. Spot oil also seems to be stabilizing near that 48-cent level. Found some good support there. Inside trade for spot meal as it holds support near its 100-day moving average, and inside trade overnight for wheat as it looks to build on yesterday's higher trade. Fighting in Ukraine continues. The markets may look to add some additional war premium here. Egypt has reportedly bought about 700,000 tons of wheat for Jan-Feb shipment in private negotiated deals last week. The wheat is believed to have been sourced from the Black Sea region, with some volume also from France. And Russia is indicating they've now had a fifth consecutive year of lower winter wheat acres. This due to declining prices. Thank you for listening, everyone, and have a fantastic day.